Hi traders, good evening. Namaskar. 16th of June 2022. This is a Thursday evening, 42 minutes past 8 p.m. A little late today. But it was quite a bloody session for the Indian equity markets. Nifty and the BankNifty, both the major indices, losing more than, or should I say, close to 2.5%. 833 points for the BankNifty, 368 points for the Nifty. No respite for the top 15 stocks that make up the Nifty 50, except few odd ones. So we have a breakdown. Let's focus tonight on the index rather than looking for chasing any stocks. Let's focus on the index, and if this breakdown extends further on the downside, what are the next level of anticipated supports? So let's blow out the daily chart of Nifty, and this is some really old zone that we had drawn I think during the months of March this year. So we can extend this a little bit and we can see that how the index has now managed to clearly break below this. We will do relatively better to understand the next level of supports if we turn our attention to the weekly time frame. Yes, there you go. Now, number one, we can see this channel breakdown. All right. Number two, we can also see that this particular zone that we had drawn on the daily time frame, this was the congestion post which the market had given us a breakout, and the index did manage to respect this level in the recent past. Supports were held, but with today's big down move, the index has broken below this and closed. However, this is the weekly time frame, so we should give the index a day's time. Friday's close will make better sense. So, $1 million question: how far can this price breakdown fall? We have answers to this, and I think we had done pretty decent homework in the past when the market gave us this correction. We can see that volume profile of this low to this high suggests that within this range, the index had seen some decent amount of volumes. This was also a pretty decent price congestion. And interestingly, I have confluence of, not exact confluence, but near about Fibonacci retracements and extensions coming close to each other. So let's zoom in and take a look at these levels. The first zone that I look at is 14,978. So we can say 15K, 15,100. So 15 and 15,100 is the upper border of this range. That's this one. And the lower border of this range confluences with 14,400. This is a slightly wider 400 points for the Nifty. But clearly two round numbers, 15K, 14K, playing out as the anticipated supports from this particular zone. What worries me a little bit, now we can discuss this, is in case it gets out of our hands and it starts to get really scary and bad, then I don't want to, but we might have to start talking about sub 14K levels. I've got a brilliant confluence at 13K, and the point of control of this entire run up that we have had in the past, 2020, 2021, let's not go there right now. Let's try to understand the extent of this correction. In terms of high to low, if I consider the highest point to the lowest point, that is today's session, we're looking at 17.5% correction. 17.5% correction in a structural uptrend is normal. It's okay. If you have seen very strong uptrends, then within these very strong uptrends, you do get structural corrections. Now, this was March 2020 low, 23rd March to be precise. If we go back a little bit before that, and this is the Nifty near month futures, if, say for example, we consider from this point to this point the rally that we have had, we can clearly see that it got marred with around 4 corrections. Should we take a look at the extent of these corrections just to understand that before the coronavirus correction, what was the average extent of price corrections in the market, especially when it was in a structural uptrend like this. And this was the third one, and this is the fourth one. Let's take a look. So the first one gave us around 12% correction, 10.8, 11% correction, 14.9, 15% correction, and 12% correction. So on an average, you can clearly say it's around 10, 11, 12% kind of an average. So the max that we had was was this one, sorry, 15%. So not bad, 15% correction, and what we have now in our hands as of now is a 17% correction. So it's a little off that 14%, mildly 2%, but still okay. What I also like, or should I say like from the perspective of the fact that this particular correction of ours that we're dealing with, though it has fallen like 17%, but it's taken enough time to be precise, high to low. It will give me the number of bars also, 34 bars on the weekly time frame. That's over 6 months. So in terms of time, price corrections, price rally does consider time also into perspective. And so in terms of time, it's fairly matured. The quick comparative analysis that we had done here, I will draw the last one. By mistake I deleted it. If you take a look at these 4 past corrections, you will see 16 bars, and 7 bars, 7 bars, and 11 bars. What do we understand from this is, especially in a structural bull market, sharp corrections are primarily short-lived. They just correct just to bounce back. In this case that we are dealing with, it's been 34 weeks. 34 weeks. We are down 17%, and it's been more like a drag. It's been more like a drag for the markets, and it's been fairly frustrating especially for the short-term traders. Now, unlike that period of time when we did that comparative analysis, now where we are today, the macroeconomic parameters are definitely not in our favor for equity as an asset class, and the rising rate of interest environment is likely to stay maybe for a couple of more quarters. Completely depends, I believe, on crude, because as long as crude stays above the $100 mark, the pressure on inflation is very likely to stay. We need to deal with this, and the stock markets will act and react accordingly. So brace yourself for lower downside. You should not be surprised if the market corrects further. Maybe some kind of panic is needed for the market to bottom out, but I think investors or spot market traders, investors would take it slow. They wouldn't expect that this is it, keep buying. I think they would say, let's buy a little bit, but let's wait out and see how it plays out the next month or the next quarter. So I don't think buyers will be in a hurry unless we see something significantly surprising. So I would suggest, let's see how the index deals with 15K. I was talking about Maruti over the last last couple of videos. I think that was the only stock which fell the least, but that's not the case. Hindustan Unilever was also one stock which fell the least, but nevertheless, stocks wouldn't be a good idea right now from a trading perspective. Focus should be on the Nifty and the Bank Nifty. As I record this video tonight, quick take on the global markets, 6 points only positive, nothing much here. The US markets are heavily down, as so are the European markets, so it's not looking so good. So I think we should prepare ourselves for a retest close to that 15K, 15,100 in the immediate time frame. All right, thank you. Take care of yourselves, trade well and trade wise.